We're here.
We are here, and we will be here for at least the next hour, hopefully, as we continue to wait for Instagram Live to catch up. All right, there we are. I'm clicking go live, and we're going to get this party started.
Let's do
Thursday, March 20th of the year 2025, start of the NCAA men's basketball tournament. So congratulations, Larry. Unfortunately, your Florida Atlantic Owls didn't make it to the tournament this year because previous head coach Dusty May is now at the University of Michigan. I believe they're a 5 seed taking on, I forget what I did a bracket. I haven't even watched hardly any college basketball this year. I mean, it's just getting to the point. I guess that's just a sign I'm getting old. And no, I did it last night. There was like this twitch. I mean, like I said, I've hardly watched any of it. My alma mater was one of the worst schools statistically, I think, in all of NCAA Division I basketball. So, true story. Anywho, a lot happening with real estate in South Florida, as there always is. And once again, normally resident and now 47th president of the United States, Donald Trump. You may have known about this. Obviously not having as much of a real estate background as you, I was unfamiliar with the Opportunity Zone program. And for any of you who don't know it either, South Florida's real estate scene has seen its fair share of game-changing policies, but few have been as controversial as the Opportunity Zone program. Now, originally introduced during Donald Trump's first term, the initiative was designed to attract investment into economically distressed areas by offering substantial tax incentives. Now, with the possibility of a second Trump administration putting this into effect, the program, often called his baby, may be getting a reboot, but will an updated version correct the past issues? Larry, to start, what were some of the most notable past issues that you recall?
You know, we didn't get super involved in this as a residential real estate agent and broker. On the investment side, on our multifamily business, we considered this. It also didn't really benefit our business too much, but this was a huge, huge thing. So I'm a little disconnected from the core issues, but I could tell you what people are saying about the program from a negative perspective. You know, there was complaints or skepticism that the program didn't do really what it was supposed to do, which was drive investment into areas that needed investment or could use investment, or areas that otherwise wouldn't get investment. And the critics would say that a lot of the money that went into opportunity zones benefited again the wealthy or the upper middle class versus what the goal was, which was to revitalize certain areas that were, that needed that money. Yeah, the lower income areas. So the goal is pick areas that really could use investment, specifically lower income areas, and offer tax incentives to invest in those areas. So that way people could take money from other asset classes, other places, and put it into those areas to inspire growth and improvement in those areas, instead of just let them kind of be these lower income areas that aren't getting that attraction of capital. So that was the goal. People suggest that, or critics suggest that maybe didn't happen properly. So, So again, we've seen huge positives, I think, from this. There's projects that people can point to that this was a great idea, and then there's projects that people can point to say that, hey, this didn't do exactly what you proposed it would. So, yeah. Okay,
well, and again, this hasn't been launched just yet, but given the fact that Trump is going to do what he's going to do, and having the Opportunity Zone program in effect last go round, and maybe it's good. Maybe they'll figure out what went wrong last time and make those corrections and roll it out, and it will do much better, or it'll do worse. At least progress sometimes is just failing in new ways.
Well, Well, they give a great example. They say, take Scottsdale, Arizona, for example. One of the largest pickleball facilities in the world is currently under construction in an opportunity zone there. So the comments are, yeah, this creates jobs, but is this really the investment for improving a lower income area that makes the most sense for that lower income area? It clearly makes probably good business sense, probably. But is that really what the purpose of this whole tax incentive program, was for? So,
right. Well, when I think of neutralizing crime and drugs and poverty-stricken areas, I feel like pickleball is one of those universal sports that everyone can get behind and just raise the tide, raise all boats.
That's yeah. I mean, hey, that part of what drives improvement in an area is investment in new parks, new projects. And this, I don't know, you could argue this is a new park. I'm sure it's a high end. It's in Scottsdale. I'm sure it's expensive. I'm sure the local, maybe lower income people around that project aren't like spending money or have a subscription to this pickleball club. Maybe they do, maybe they don't. But still, it's creating improvement in the surrounding areas. I think probably so. Yeah. So there's always going to be debate over this stuff. This isn't an easy. There's no easy answers. Otherwise, the solutions would already be there. So yeah.
Right.
So,
and of course, given the fact that the administration at this point seems to have been focused on many other issues instead, how soon do you think they would even reenact something like this if there was some sort of timeline,
Yeah, I mean, couple comments from some of the private equity funds that raise capital to then go invest in these opportunity zones. Some of them were saying when they were polled here, hey, are you going to start another fund, and knowing that Trump's in office so you can go do this? And they were kind of like, well, kind of need to know what the new plan is. So the sooner they make a decision on this, the better. So that way the investors can prepare and organize and orchestrate their execution on the new stuff, whatever those changes might look like. So another comment they were making, I was going through this earlier, was in 2010, the census from 2010 is what was used to basically determine where these opportunity zones were, is what they claim. And so, there was some commentary around, hey, well, 2010 census was 15 years ago, right? Or in this case, it was 7 years ago when this was created, or whatever it was. And things had changed since then. So maybe using the census isn't the best and most efficient way to make a decision on this stuff. So,
right.
Yeah. But South Florida, I would argue, could see more investment or more improvement from this opportunity zone project, right? So there's areas in West Palm, Miami, Fort Lauderdale that are lower income areas that absolutely could benefit from this. So I don't think it's all bad. Tax incentives to put money in the proper locations it's needed is a good idea in principle, right?
And generally speaking, given the fact that Trump resides now in Palm Beach County in South Florida, you would anticipate him throwing a bone to this area regardless. I mean, even if it's not necessarily Opportunity Zone 2.0, but something where, every sitting president always tends to, do something, go out of their way to try to help develop or promote, where their home base is.
Yeah. We'll see. I don't know.
I'm just saying.
Yeah.
You would think.
I mean, he probably spends his time between West Palm Beach International Airport and Mar-a-Lago. That's probably.
I was going to say. I mean, I feel like he's back every other Sunday playing around the golf.
There you go.
Yeah. So.
Yeah. This whole thing, this national opportunity zone bill or project or idea is similar on some level to something we're going to talk about in a little bit, which is the Live Local Act, which we've talked about a bunch. But Live Local is another way of incentivizing investment in affordable housing, and this is another way of doing that on some level as well. So, I mean, the idea is a real thing. It's something that we've been trying to do as a country, as a city, as a state for years, trying to incentivize lower lower cost of living to help families in need, right? So
right. Yeah, the affordable housing still an issue, and probably will be for the foreseeable future.
Especially,
but there are,
yeah,
exactly. Yeah. But there's of course other things happening in South Florida that garner our attention, and I guess this is one that's actually affecting our country nationally as well. But my dad sent this to me the other day from the Wall Street Journal, and you did a video on this just last year about the Blacklist, the Fannie Mae, Freddie Mac Blacklist. It's not going away yet. And it was interesting what my dad asked me about it, since he knew I was knowledgeable to a certain extent on the topic. I mean, his first thought, and frankly, it was very similar to mine when I was first learning about it, is this legal? Like, are you allowed to have this list that, is basically bans certain condo buildings from being unable to get financing? Like, it's crazy. What is your overall opinion of this blacklist that's kind of hanging out there?
What's interesting is the last time we did a video on this, we talked about how the blacklist was going to be made public, right? Remember that?
And I don't think it is.
I don't think it's public yet, or is at all, or will be. We'll see how that goes. But yes, transparency is good. This should be, we should be working through this to just make a public blacklist. On some level, if you're on the blacklist and it's publicized, it's even worse probably for your building. So it probably hurts more, but at least everyone knows, homeowners and buyers alike, because I think a lot of homeowners don't even know they're on the blacklist in some cases. We just had a call with counsel this morning for a client that's selling a condo. They were working with some other agent. They found us through our YouTube videos talking about this, and they reached out and they let go the other agent and wanted to work with us. And so the first thing we did was, because it was a really messy situation, was say, hey, let's get our counsel, our attorneys on the phone that specialize in association law, and let's talk through this. Let's understand what you got going on. And so their situation was, they found a buyer. They went under contract, and the association would literally not even respond to them because they are condemned by the city. They're clearly on a blacklist. And this was a cash transaction, so they didn't even need any financing approvals, but they literally could not get approval from the association or clear title for the buyer because of all this shit that's going on. And so the question was how do we sell this thing? Because the seller owes, she owes about 50% of what she was selling it for. She owes in a loan, right? She has a loan on the property for about 50% of what she was selling it for. And she's just like, I inherited this thing. I inherited the debt. It's now in my name. And I can't just foreclose on this. I have good credit. I take care of my stuff, right? So I'm not just going to let this foreclose. I need to get rid of this. I just need this to go away. I don't even care about making money anymore. Right. I just need to get this gone, but I can't sell the damn thing. So crazy story. So we asked, they had gone through title work and title commitment with another title company already to get this deal done. And so we had now requested the title work and the loan, the title commitment, and to get a handle on what's going on with title. Why can't they issue title insurance? And then going down the rabbit hole of trying to find the management company. And supposedly there's no management company because they fired one. The other one hasn't been onboarded. They don't know where this is. So there's just like all these levels of issues. And this has nothing to do with a blacklist. I mean, this condo is blacklisted. There's no question, right? There's no question this condo is blacklisted. If it has city issues, if it has title issues, there's no question it's on the blacklist, you know, but this is just an example of what we're dealing with on a daily basis here. So regarding the blacklist, when you work with us as a seller or a buyer, we're going to know this answer relatively quickly. We're not going to, they give this whole story in this article about, oh, imagine if you were a seller, you find a buyer, and then you go under contract and you go through this process, and then you find out 30 days after marketing and being under contract, thinking you're selling, that all of a sudden you're on the blacklist. That's not how we do things. We figure this out right away. It's not like snap my fingers, figure it out. We got to dig, we got to probe, we got to get documents. We're going to get to the answer pretty quickly. And the lenders we work with typically already know the answer. And then on top of that, in this article, they also say, oh, you can't get financing. Well, that's not true either. What they're talking about when they talk about a blacklist, and you know this, John, just we've gone through this. They're talking about Fannie and Freddie. Fannie Mae, who basically is a who creates the what's the word we want to use? Who creates the guidelines for a conforming loan in the U.S. They say whether they're willing to finance you or approve you as a conforming loan or not, right? And if you're a conforming loan, well, then you get the standard conventional rate, the standard loan amount, loan to value. You get all these things that are beneficial, a better rate, et cetera. But if you can't get a Fannie Mae loan, you can do what they call a non-conforming loan. And that's what we do with a lot of clients. We get them non-conforming loans in these buildings. And there's a whole process to go through that. So we figure all this out. And so you can get financing on these things if you want them, if you want to buy these things, right? Which is also a big question mark sometimes. But it's not that you can't get debt, period. You just can't get good debt or better debt, or the best debt is probably the way to say it. So, So we've done this where, you don't have to go cash. You can get financing. But again, if you're on the blacklist and Fannie Mae isn't lending, you're taking a hit in value. There's no question about that. Right. So
for people who are unaware of it, I guess if you had to summarize, why would they have this list not available to the public? What is keeping them from just having it out there? Why no transparency on this?
I think there might be some like legal consequences or like, you put this list out, you hurt people, right?
Yeah.
So like, what if you're wrong? Or what if it changed last week and they're no longer on the list?
So you think you can get off this list?
Oh yeah, 100%. Mm-hmm. You can get off it. You just need to, I know buildings that have, I don't know what the word is. They've applied to be removed from the Fannie list, the Fannie blacklist.
They've applied to be removed from a list that technically doesn't exist.
They applied to be, well, the better way to put it is that they applied to be conforming for a Fannie Mae conforming a building, right? Is a good way to say it. So because that's what they're saying. They're like, you do not conform to the guidelines of Fannie Mae. You're not technically, they call it a blacklist. They make it extreme, but like, it's just, you're not complying with the guidelines. And this building does not comply with the guidelines. And the guidelines are, there's a list, right? And the big one is there's like litigation stuff if there's litigation on your building, if you are condemned by the city, like you're not on the list, right? And so like, these are things, there's a number of requirements. So as an example, but yeah, so that there's condo buildings that are like on it and then they're getting off of it. They're working towards getting off of it. But while they're working towards getting off of it, that's never usually an easy thing, right? Usually that looks like huge assessments, right, to get through this, or and then you got to do the work, or you missed your SIRS study that you were supposed to do, or your milestone, right? With all these things we talked about, and you didn't do them by the deadline of end of 2024. And so you don't know what's going on, and you're working to get that done. And you're doing concrete restoration, you're doing seawall work, whatever the issue is for the building. And so right now there's over 1,400 buildings in Florida that are now blacklisted, they claim, right? So,
which that's a tough number. Like I'd be interested to know, and I'm sure we could probably look it up, what percentage of condo buildings in Florida would that apply to? I mean, 1,400, that sounds like a lot, but obviously there's a whole lot of condo buildings in Florida.
Yeah. You know what's interesting? I find that, the higher end condos, like, so the lower end condos, I mean, the condos that are selling for less than 100 grand, that are 3-story, 4-story, 5-story buildings, or 3-story or more, that's where this starts to really take effect. Some of these issues, that's where we're seeing some of the bigger issues, because a lot of these people can't afford it, right? The people who own $1 million condo, they may have owned it since the 1970s, and they bought it for $150,000, and they're still there. That's less of an issue. Most of those people who have bought those, and so because it's worth $1 million, and even if there's a $200,000 assessment, they probably can get out of it. Not always, but a lot of times. So like usually what we've seen is like, you almost don't want to touch a condo that's worth 150 or less that has these issues, right? Because it's just so hard to sell them as a real estate agent. That's what I'm saying, not as a buyer. We can go into all that later, but yeah, it's more some of these condos we've taken on that they won't sell for, like, you need to pay, like, you thought you were worth 150 grand, and now you're selling for like $75,000, and you got an assessment, and you have all these issues. And so, yeah, that's
I know you can't necessarily determine, well, without a doubt, how much the blacklist has impacted some of your deals, but skimming over this Wall Street Journal article and talking about how real estate deals are collapsing at the closing table, I mean, how much have you really encountered that when you're getting to the end and suddenly you're not able to,
you're not getting
financing?
In my world, you're not getting to the end and having that problem. We know already. We knew.
Okay, so well in advance.
Well, let me give you an example. This lady engages me to help her, right? She's like, hey, can't sell this thing, having issues, whatever. She's already kind of acknowledged that she's having issues. And I get on the phone with the attorney, and the attorney's like, well, this, that, the other thing, let's go list it. Let Larry go list it, find a buyer, we'll figure it out later. And I'm like, no. I'm like, let's get the title commitment. I want to see it. And then let's decide if this is a sellable asset, because I'm not going to go list this thing without knowing that it's sellable. So we go through the process. We need all the documents. We need to see everything. We're sending them to our lender before we're even listing this property. We're gathering the documents. We're sending them to the lender, and we're asking, are you good with that? Like, can we lend on this? What can we do with this deal? And they'll go through it. Some of our lenders, like one of our lenders they've created their own blacklist. Like they know what buildings have been blacklisted, haven't, what have issues. And they got this like internal system because they do so many condos. So we're checking it against theirs. We're like, hey, this one, we're taking this listing. What's the deal? What's the reason? Oh, we did a loan in there last week through this lender. We know these guys will take it, or this other guy will take it. So we'll just go through that process of validating and understanding upfront what's going on. So, and then again, so then it's like, okay, this one we had one that was condemned by the city. We had a lender that would do that deal, believe it or not. It wasn't a Fannie Mae deal. It was a non-QM, a non-qualified mortgage. And the buyer came, said they wanted to get a loan on it. We said, okay, great. This is who you can use if you want to. And they used that lender, and we got the deal done. They closed. They were happy with it. And frankly, those guys, that was a building that everyone else was saying in the description, cash only.
Really?
Yeah, this is an example. Like, this is stupid, right? You're getting amateur realtors that don't know what they're doing, and they're putting in cash only in the description, and that's why none of them sold. We sold. They all sold for way less afterwards, And it's because we were able to get 75% debt on that thing. Yep.
Jeez.
Done. So we don't, that's what I was saying. This is a little dramatic.
So just okay. So it sounds like a lot of inexperienced people or people that just aren't good at what they're doing.
This is
they're trying to push these. They're trying to push these deals along, and then once it finally comes to the moment of truth, that's why they're having these issues.
Well, like most realtors list buildings or condos or homes or townhomes without getting the docs. If you are a buyer's agent or a buyer, you've tried to buy a home in a community with an association of some sort, have you ever gotten the docs when you've asked for them from a seller or a seller's agent? No, they're usually like, oh, we got to go gather them. It's like, dude, you've listed this property. It's been listed for 30 days. You don't have these documents.
And you still didn't have them?
You still don't have them. So it's very commonplace for agents to not go get these docs because they're a pain in the ass to get. But we have a staff, and that's all their job. We have one person on staff. All their job is get all the docs. We have a list. We check the box, check. We annoy people until they get them. And then we get them, and then we can provide them to prospective clients or buyers immediately, and or vet out the financial, the financials of the community or the financing ability of this community. Yeah.
And your people who seek out these necessary documents, I mean, that they have to go to that much trouble just to get that from the HOA or condo.
This is the biggest issue, in my opinion. The biggest issue is these association management firms, the management companies that manage the association and the boards. They don't have good records of shit. They don't have it to get the meeting minutes. It's like, dude, you had a meeting last month. Give me the meeting minutes. It's like pulling teeth to get the meeting minutes. Or, hey, just give me the rules and regs. Like, usually we can get rules and regs pretty easily, condo declaration pretty easily, because these are the documents that were created, 20, 30, 60, 40 years ago, right?
Right. Usually
those are there. Sometimes they're not updated. Sometimes they're not digital. So you have to, like, the seller has to buy them. They have to pay $50 or $150 to get them. Like, this is insane. We live in a digital time. Like,
we live in a society.
The link, the Google Docs link with all your shit, and let's go, right? And it's like, this isn't a thing. So, like, that is the fundamental issue. And some of the new bills that Florida legislatures have passed, right, have put in there, like, hey, you need to digitize everything. You need to have a place where you can do this. Like, you know how hard it is to get a budget from most associations? It's like, it's near impossible.
No, I don't. Yeah.
It's so hard, man. It's so hard. It's like, and all you guys have to do, associations, I'm speaking to all you guys out there, get a freaking portal and just put all your documents in there. So that way we can sell properties very easily and lenders can lend on them very easily. How about your master insurance policy? Just put it in the portal. Don't make me chase you for this freaking thing. The lender needs it. Every lender needs the master insurance policy. And yet it takes 3 weeks to get that.
You know what? If you're looking for a startup company idea, maybe you put a group together that is their sole function, is to go around to these condo buildings and organize all the documents in exactly what you're describing.
The association management firms are arguably the worst service companies I've ever seen. Period. They're like as bad as Comcast.
Oh man, nobody's that bad. Come on. You're talking crazy, Larry.
I'm getting crazy. Hot take.
Oh man. So yeah, that's wow.
That's my rant.
Well, I was going to say, the more I keep thinking about it now, so all those condo and homeowners association laws that went into effect in 2024, I'd imagine that was a result in part because of so many of the issues you're describing here.
100%. So hopefully within the next few years, a lot of my complaints here will be resolved. My guess is they're still going to not have all the documents in that portal, even as they start requiring, because it's going to be required by law, that you have a portal and you put the documents in there.
Mm-hmm.
But I don't know if they've broken down exact documents, because that's kind of a little hard to do, to get that specific. So I'm sure we're going to be chasing people still, but at least we'll have most of the documents. I think those bills, some of those things go into full effect in like 26, right? Maybe some in 25. But I think it's going to be a major improvement when we get that done. A lot of these communities are starting to transition to that, but it's still a huge pain, pain. So,
so to summarize it here, as the Wall Street Journal did try to make this a little more dramatic, because, regardless, don't let the facts get in the way of a good story. It's saying how this isn't hurting billionaires with waterfront mansions. The victims are middle-class condo owners who can't sell their places. So in the end, it sounds like
it's true.
It is true. It is true.
That's true.
Okay.
Yeah, I mean, like, for example, like new construction, $1, $2, $3, $4, $5 million condos. This isn't an issue at all. It's not even a problem. They're not even talking about it. And like $1 million condos, or 500 to like East Boca condos on the water. Like, there's not really much available that's below $500,000. I mean, there are, but those condos.
That's like a hole in the wall.
Yeah. Don't get me wrong. We have listings in that price range. We have listings.
Nice, right? I mean, it's not your ordinary hole in the wall.
Yeah, there you go. We can. So yeah, those guys aren't as impacted. It's a little bit better. The higher end you get, the less of an impact this really is. So,
I see.
Yep.
All right. Well, we'll keep an eye on the blacklist and keep everyone up to date on the latest as we try to figure out how James Spader fits into all of this. Maybe that was just a TV show. I don't know. Anywho, now you had brought up a little earlier about how the opportunity zone could have a potential impact on the Florida's Live Local Act. Now, that evidently isn't the only thing that could potentially affect what we have with the Florida's Live Local Act up to this point. In fact, there is new proposed bills, House Bill 943 and House Bill 923. They're aiming to expand on that Live Local Act, giving developers even more incentives while limiting local government authority. If passed, these bills could trigger a major shift in real estate development, financing, and city planning across the state. So what exactly is changing, and how will it affect developers, investors, and the Larry Mastropieris of the world?
Overall, I think this is a pretty interesting, again, the principle, the idea, the concept is improve areas that can use improvement and otherwise wouldn't get it without incentives, right? Mm-hmm. And so same thing, similar to the Trump plan here, and this was put into place, this Florida Live Local Act was put into place 2 years ago. And so now there's some changes here, which is giving, basically the gist is the state is getting a little bit more control, and it's taking a little bit away from the cities is the gist, which I can see there's probably some concerns there, right? Mm-hmm. So yeah, so they talk about this Florida rep, Vicky Lopez, who has introduced the two bills, which is intended to strengthen and expand the Live Local Act. One of the biggest issues developers face is securing financing for affordable housing projects. Let's see, attorney Anthony, I don't know how to pronounce his name. DeUri, who played a role in shaping the original Live Local Act, says these bills will give lenders the clarity they need to confidently fund projects. In addition, the bills would make it harder for opponents to challenge these developments in court by requiring the losing party in the losing party in a lawsuit to cover legal fees. So again, it's making it a little easier for these projects to go through, which again will incentivize these developers to get after it and get projects done. So the gist of what the Live Local Act in essence is doing is it's incentivizing these developers to build affordable housing, right? That's the gist. They're doing it by taking parcels of land or areas that can be developed, or maybe typically not a parcel that would be developed, and helping them change the zoning, helping them increase the density, reducing the increasing tax exemptions, et cetera, right? So it says under the current law, affordable housing projects can receive a 100% property tax exemption on assessed value if all units qualify, or up to 75% tax credit if only a portion of the units meet the criteria. HB 923 expands on these benefits by allowing developers to transfer their tax credits, making projects more financially viable. So again, it's just this. I mean, I'm sure there's people who are pushing back on this, but improving the Live Local Act probably helps bring more affordable housing to areas in South Florida that need it. Would probably be the case. So let's see.
At least they're trying. We've been talking about this week in and week out in some form or fashion since we started doing these, and it seems like the affordable housing issues are, I mean, they're trying. I don't even know what else to say to that.
Yeah, it says HB 943 takes things a step further by restricting local government authorities even more. Key provisions include mandating approval of affordable housing projects on land owned by religious institutions, school boards, and local governments. This is what we were talking about earlier, which is these developers can buy land, or if they already own it, they can change the zoning. And so now they're mandating approval of affordable housing projects on these types of places: religious institutions, school boards, local government property. So again, it's kind of stripping a little bit of the local city control away from things, and just the state saying, hey, this is happening, whether you like it or not.
That makes sense.
In these circumstances.
Right.
Let's see what else it says. Requiring cities to allow multifamily and mixed-use developments in planned unit development zones or any zoning area not exclusive for single-family homes or duplexes, if at least 40% of the units remain affordable for at least 30 years. So the goal here is, there's requirements around this. They have to meet certain rent numbers. They have to keep rent at a certain level in parts of the project in order to get these approvals. So again, they're trying to create affordable housing by requiring it, by basically giving tax incentives.
Right.
And again, this is another way for them to kind of push through projects that would otherwise be zoned something else. And now they can swap the zoning. And it looks like if you want to upzone something or change zoning, that is a big to do in a city. We did it on one of our parcels. We went from 8 units to 12 units, not a big deal.
And that required different zoning?
It took me a year and a half to get there, to get that done. So and now I'm small fry. So these guys probably do it efficiently, but these guys, it takes years to get zoning changed sometimes. Right. And so this is just like, hey, this happens. Right. And so
in essence, it's cutting through the red tape that is associated with zoning.
Yeah.
That sounds like the gist of it here. I guess that must really be a huge problem for getting a lot of these projects off the ground, or they wouldn't be proposing new bills for it, I guess.
I mean, all of this is around zoning, right? It says protecting developers from newly passed local restrictions, ensuring they can build to the maximum lot size, height, and density allowed under the Live Local when it was enacted in 2023. So now everything goes back to 23, and even if the city changed that. So again, some cities might not love this. They're trying to develop or plan their city accordingly, and they probably have master plans, and the state is over here saying, you're going to let these developers do whatever the heck they want to do as long as it fits these guidelines, and we're going to allow this to go through. You have less control over your master plan at this point. And again, that's in the spirit of offering affordable housing. And here's the kicker to all this, though, and this is the big picture, is the affordable housing that they're offering isn't really super affordable, right? It's still expensive from my perspective, but at least it's it's an effort in getting
Right.
there, because again, we own and buy multifamily that's like lower income / middle, workforce housing type product. And we know no developer can match those prices that we offer in rent, because you can't build anywhere near, even with the live local projects, you can't get anywhere near as low as we can get in the 1960s product that we offer, right? We renovate them, we get them cleaned up, and then you rent them out. And that's the real affordable housing, but no one can rebuild that stuff. You just can't do it. The supply is not going to be increased in that class of property, because it's just too expensive to build this stuff. So again, this is needed. There's no way around this. You need to incentivize developers to build affordable housing, right?
It's just a question of how affordable it will actually be.
Yeah. And it's tough, but it's better than nothing, right? This is a step in the right direction. And I'm kind of pro development. So this is, I'm like,
you're a real estate guy. I could see that.
Yeah, that's it. Some people out there are like, hate that, but then it is what it is.
I see. Wow. Well, that's, so between Blacklists and affordable housing, certainly we're touching on some of the top issues happening right now in real estate across the state. I know there's been other things going on, particularly with, in the Eastern Europe and Russia. I think there's some sort of conflict going on over there, but there's also Russians setting records right here in Miami-Dade. Russian billionaire Vlad Doranin has sold his Miami area home for a record $120 million. That's a lot. I'm surprised that's the record, though, because I know there's been a lot of sales around Star Island that have gone pretty high. Oh, so this was a home that once belonged to NBA legend Shaquille O'Neal. That's interesting. But get this, the new owner may be planning to tear it down. So, Larry, you've been hanging out at Star Island lately?
Always.
Mm-hmm. You say you go by here, you saw the place, you and Vlad hanging out.
We're not spending a lot of time in Miami. We spend most of our time in Palm Beach and Broward, but
right.
But we know this area
but it's
well.
Interesting.
Yeah, it's interesting. It's just further supports. I mean, you're seeing this type of this action in Manalapan in Palm Beach.
Right.
You're seeing it on the islands in Boca, right? So hold on, let me share my screen real quick. So this is the home, right? Is this the home?
Is it? It doesn't look very Miami.
No, this is in Miami. What are they doing here? Showing us the wrong home. This is it right here, though.
Okay, now we're talking.
Here we go. Yeah. So I could see why somebody might develop on this parcel. Here, let me share Star Island, Miami. When I first came down here, you can just drive onto Star Island for the most part, or you used to be able to. It's right here, so this is kind of cool. Miami Beach is right here. It's right along the MacArthur Causeway. Right.
How do you
right
actually get
here.
onto it?
There's a bridge right there, which is pretty cool.
Oh, there it is. Okay.
Yep.
I was gonna say it's one of those. It's so nice you actually have to take a boat.
And what we're talking about is one of the wealthiest zip codes or areas is Fisher Island, which is right next to it, right?
Yeah.
And so these are the spots here, right here. So you're in between downtown Miami and the beach, which is pretty cool.
That would be interesting to have a neighborhood that you had to ferry your car on and off the island. Like that was the only way to get there.
Well, that's Fisher Island.
Oh.
You can't get to Fisher Island without a ferry.
Really?
Yeah. There's no way. Yeah.
I was gonna say I've only been on a ferry one time with a car, and I was like up in Seattle.
Yeah. That's how you go.
Interesting.
Yeah. But this is just yet another example of just the enormous wealth that's relocating to the area.
Not just the enormous wealth; it's how much the property has appreciated in value. According to the article, as mentioned, Shaq he sold it for $16 million back in 2009. So we have gone from $16 million to 120 million in just over 15 years.
It's crazy. It's crazy. It just speaks again to a few things.
That's the kicker to me. That's insane.
Yeah. A major appreciation in the Florida market. And obviously 2009 was a different time. That was the end of the world. So
no, that's true.
Yeah. But still, I mean, this is a crazy number. And we're seeing this more and more, right? You're seeing, because you got the big players are here, right? You got the Jeff Bezoses, you got everybody here that you can think of.
Well, and you mentioned Manalapan and Steve Ross and so many other people who live right around there. I feel like at this point Ross is like recruiting people, because I see an article like every other day about some other notable billionaire of a Fortune 500 company who's moving in there. I'm like picturing Stephen Ross, 84 years old, acting like a frat bro, calling up people like, dude, you got to come down to Manalapan, man. It is happening.
Oh, it's so true. So true.
Sitting there like hat on backwards, whole 9 yards. I could see him being like that. In case you're wondering, James Alcide has been on the ferry in Seattle. Well, I don't know if you'd been on the same one I was, James. I was going to a wedding in Oak Harbor. I believe that was the name of the island. So it was actually where they filmed the movie The Ring, if I recall.
Oh, that's cool.
I know, right? Anywho. All right. So speaking of Stephen Ross and related Ross, I saw this article the other day. His luxury project. I thought we may have talked about this, but either way, if we hadn't, it's got to have all the fixings, and a popular one that people want. It's like, you know what? I have one kitchen, but it's just not enough for me. I need a second kitchen. So West Palm Beach, I guess previous zoning laws were like, whoa, I don't think you can have an extra kitchen. It's like, all right, well, you know what? We're going to make sure the rules get changed here. So high-end condominium developments coming up along that waterfront, the zoning laws will now accommodate that growing demand to give residences 2 full kitchens, Larry. So hopefully you can sleep soundly knowing that this is happening.
Well, in most of the luxury single family homes here, you're getting what they call a butler's pantry and or a butler's kitchen. And
is that what they call it? I didn't even know that. You're the high roller here.
So most of the homes that are, call it, I don't know, 4 million plus, 4 million is getting closer to possibly not having it, but 5 million plus, you're getting 2 kitchens for the most part. And for example, like the home we just sold here in Boca, we went to their holiday party after they closed this year, and so they had all the cooking being done in the back kitchen, and then the front kitchen was more for show, which is the bigger kitchen, but that's where
it's for show. We don't actually use it, but I mean, it's here.
Yeah, it's a thing. So all the dirty stuff, all the stuff is done behind the scenes, and so you can imagine in these super high-end condo buildings with a lot of square feet, if you want to compete with single family homes, because in a lot of cases, these single family homes are worth, equivalent to what these condo units are worth, right? And they're comparable. And it's just a slightly different buyer. And a lot of these buyers that are really wealthy don't want to have to take care of a full house. They don't want to have to think about it. They want to be able to turn the key or just lock up and leave. And so this makes sense to me. I totally get this. So
I believe you.
Yeah.
I mean, hey, if you got room for it and you want the kitchen while not getting the other kitchen dirty, that's
come on, man. Sorry. It's a show kitchen. That's what it is.
I just feel like it takes pretension to a whole other level.
You gotta be fancy, man.
Oh man.
You'll get there, John. You'll get there. You'll need 2 kitchens one day.
No. That's what
you'll require 2 kitchens one day.
Oh, wow.
You're not buying.
No.
I'm surprised this hasn't come up sooner. I'm surprised there's like an issue with this. Like,
well, that's the thing. That's why, that's the part that kind of surprised me. That when they were doing the zoning laws and coming up with all the rules and regulations, they were like, "All right, well, how many kitchens are we allowed to have?" Like, wait, whoa, Why would we have more than one? Who would have that? We don't need that. We can't allow that. That it's like, who the hell cares? I mean, I may be laughing at it, but it's like, you can make your house into like 5 kitchens. I don't care. It's your house.
Right? Exactly. I guess it's a plumbing and sewer thing.
Oh,
but
that's good.
Come on. Like, you tell me how many people that are buying these condos are actually putting them to full use all at the same time, right? Come on. Like, who's actually there all the time? These guys aren't there all the time, for sure. Yeah. Now they're saying 2 full kitchens. They're not even saying like a butler's kitchen or butler's pantry. They're saying 2 full kitchens. So I don't know. Maybe they're, I'll be interested to tour this building as the project goes on. So it looks epic. I mean, this building.
I'm sure it's going to be amazing. Yeah, I remember. I know we've talked about this before. Yeah. Oh,
yeah. Right.
So you'll be awed by the outside, and you'll be wooed by the 2 kitchens in each of the units. Well, I mean, I don't know if it's going to be all the units, but all the times. Anywho, so hey, let's talk a little more about Manalapan. It's the trophy market that's obviously booming right now. We've talked about that a lot. Notable guys like Steve Ross. I think Jeff Green's in there too. A lot of the high rollers in this area. I guess this was a recent article, The Real Deal, who does a lot of good stuff. They were talking about how the Manalapan, area has risen to the level that it is now. Yes, I mean, because obviously, I mean, I know when you think about Palm Beach County, when you think about the big money, naturally, Palm Beach itself. So it's so interesting that, people don't realize that, you got Manalapan. It's, it's Palm Beach, but it's like a little farther south is right there. And, it's only a 2.4 square mile town with just over 400 year-round residents. And yet it boasts 6 properties listed at over $50 million. In fact, I know we've talked about this. One estate is even asking for $285 million, making it one of the most expensive homes on the market in the good old US of A. So, Larry, what comes to mind when you are thinking about the growth of Manalapan?
It's just again speaks to there's so much wealth moving here. It's insane.
You think their homes have 2 kitchens?
This home has more than 1 kitchen. I'm certain of it. Yeah. I mean, look at this closet.
Oh, that is very nice. Wow.
And this is insane. How many square feet is this? Hold on. This is a 50,000 square foot home. 50,000 square feet. $5,700 a foot is the asking price on that for the
285. Oh, yep. Man.
Yep. So the lot is 171,000 square feet. It's a big.
It sounds like an island of itself.
It's huge. Let's see what this one is. I haven't seen this. So there's only 2 homes in Manalapan that are listed for over 100 million only. And this is the other one.
Well, I was going to say it goes end to end. So it's like, it's got the Intracoastal on the one side of it and the Atlantic on the other. Okay.
Yeah. Yeah. Park your, 200-foot mega yacht and then have the ocean views right here. Look at that. That is insane. I mean, that's insane. Ocean views like that. That's wild.
You know what you should do? You should build a canal on the property itself, make its own canal. So you got to park that on the one side and you just, bring it through itself. I don't need to go to the inlet. Let's just,
I agree.
Why not?
Hey, why not?
Make it happen. He makes things happen.
Let's see here. Yeah. So, I mean, Manalapan is just a different place. It's just different. Nothing else has sold, though, in the past year above 100 million, at least on the MLS. There may have been a transaction or two.
How many of those are private, or at least off record, if you will?
Possibly. Let's see. It says the shift in demand became undeniable when billionaire Larry Ellison made waves in 2022 by purchasing a $173 million oceanfront compound, Florida's priciest home sale to date. Just a year later, he doubled down, dropping $277 million on EAU Palm Beach Resorts and Spas, which is a place we've gone and had dinner and checked out the spa. And it's a hotel basically right in Manalapan area, right on the ocean, which is just an awesome place. So he bought the EAU resort. That's great.
Why not?
Yeah. And then it says, with names like Sean Hannity also joining the ranks of Manalapan homeowners, and I think he owns more than one property as well.
Places. Yeah.
Yep. And you got a number of people doing the same in that area that have just enormous wealth. And Manalapan is just one location. I mean, it's got a lot of billionaires. What's interesting about Manalapan to me personally is I don't entirely understand the concept of owning on Manalapan, but whatever. Just because over here, when you come on the island, I guess maybe you're taking your helicopter there and you just fly over this. I don't know. But this all over here is not like where you kind of hang out and spend time. I guess Larry Ellison's hanging out at the EAU hotel, but I guess you're staying on the island mostly. You're probably you're in Palm Beach. You're going from, because Manalapan's down here, right?
Well, that's what I'm saying. It's kind of off the beaten path of what I picture. Yeah, Palm Beach.
Palm Beach is all the way up here. So I get, don't get me wrong, there's a bunch of wealth all the way up from Manalapan to Palm Beach. But to me, it's I don't know. I'd prefer to probably be closer to downtown, but I guess it's hard to find those epic residences in those areas,
right,
over there. And I mean, don't get me, again,
I guess there's a little more privacy, right? Because how often are you going to get off at Lantana and you're not going to the Key Lime House or something. I mean, what are you doing?
You're not doing that. My guess is you're not doing that. If you're at that level, you're going to be recognized. You don't want to be hanging out there. It's a little bit of a different scene, right, than the billionaire scene. So so that's why I don't entirely understand that. My preference would be I don't know. We've seen different movie stars buy in downtown Del Rey on the ocean, right? That to me makes sense. $30 million purchase. I don't know. That seems sufficient to me. I don't know why you need a $170 million home, but cool. Yeah. So
when you got FU money, I mean, I guess that's just what you do. I don't know. Cool. Never had that problem.
Yeah. Yeah. One day, John, you'll have that problem.
Oh yeah.
Talk about this thing.
But will it make me happy, Larry? Will it make me happy? Will that second kitchen make me happy?
It will make you happy.
All right. I got goals.
You're going to buy happiness.
All right. So last but not least, let's talk about a condo developer strategy which backfired. I don't know if you saw this. Vivian Demond to complete a 54-unit waterfront tower in North Bay Village that has been stalled for more than a year. This was originally led by the Malaysian developer Pacific and Orient, which collapsed under bad decisions. Gee, I haven't heard anything about that around here, Mandarin.
I was just going to say,
following Miami's proven formula, generating buzz, securing pre-sales, leveraging outside financing, the developer self-funded construction and launched sales late with little fanfare. So unit layouts weren't appealing, and the bizarre decision to place the lobby on the 6th floor that confused potential buyers. No kidding. They should have put a kitchen in there. Financial troubles mounted, liens piled up, totaling near $7 million, and lawsuits followed. By late 2023, construction stopped, leaving the site abandoned and residents frustrated. So with only 2 pre-sold units, 1 refunded and 1 sticking with the project, the condo was at a standstill. So the question is, Larry, can Vivian Demond get this thing turned around?
We just took a listing down that way, right on North Bay Village area, right, in the general area. It's a condo, and we work down there, but seldomly, and the seller was just preaching to me about how awesome this area is going to be long term, the development, etc. And I was like, I agree. And this is kind of an example of what things are trying to happen. There's a comment in this article about North Bay Village is seeing increased investment, but no other condo project has advanced this far north, right? So this is
you're out of your element.
Yeah, it's you're trying, which is great, and this is sometimes when you take that big risk, you win big. So it's quite possible. Now we're entering a changing market, and so this project is mid-development or underway already, and they're having problems outside of the market, which is not a great place to start. Just like the Mandarin, it's Mandarin, like you're going to have more struggles, not just with like, you got to do what you can control well, which is build the damn building and sell and market the thing well. And if you can do those two things, you're at least in a better position to weather these cycling markets, which we're absolutely in, where the cycle is upon us. And so like they're already kind of at a disadvantage here. They're exploring a little bit further north than, most of these other projects have been proven out to succeed in those areas. So again, it's like this is not this is just a story that, just like the Mandarin, not everything works, right? Not everything works.
My question is, in cases like this, you get to a point where construction has stopped and there is no end in sight. Is there the possibility that whoever is going to come in is just going to tear the whole damn thing down and put something else there? Like, what the heck happens in a situation like that? Does that ever not get finished?
Yeah, I don't think things just don't get finished here in South Florida. The market's too strong.
Right.
There's too much going on for the most part. I don't know. We haven't seen anything like not get done. The Mandarin being an example of something that hasn't been finished yet, but it will get done.
It's kind of
it will get done.
It's going to the
It's got a lot of bad press, but it'll get done, I think. They're explaining in this article, construction's already underway. And in today's market, with rising construction costs and labor shortages, that could be a huge selling point. So, however, reviving the failed project isn't easy. The market is saturated with new developments, and the Tula residences, which it's been rebranded to, must overcome its troubled past to attractive buyers. And this is the same thing the Mandarin's having. Like, I hear people talking about the Mandarin and just saying like all these crazy negative things. Oh, the concrete has been sitting untreated, or there's no stucco on the building, and it's been that way for years. And you can imagine how water saturated the people who don't even know anything about construction are like.
Right. I was going to say, I wouldn't know.
Like, is it really a problem? It might be. It might really be a problem, but maybe not. I mean, this thing has to CO. It has to pass, inspections, et cetera, et cetera. So it's probably going to be fine. But that's what the public is saying and thinking, and the press around all this stuff. So once you get into that space, it's like, or why would you put a down payment, $1 million on something like this? You're going to put $1 million down when you're not sure if these guys are going to finish. That's why a bunch of the people at the Mandarin are just like, hey, give me my money back. And they're suing the Mandarin to get their money back, because they're like, maybe I'll buy it, but I'll buy it when it's done now, because I don't trust you guys that you're going to do the job. I don't trust you that the building's going to be in top-notch shape. And I might just go buy something else in the meantime, or I'll take my money that I just had with you for years and actually get a return on it in an investment instead of just sitting there, right? So this is like the problem that starts to snowball when you screw up like this, right? So yeah. And again, like over the past 15 years, most investors, most real estate developers, they could do no wrong. I talk about this a lot. We started buying property in 2010. I didn't know what I was doing yet, and I made mistakes and we screwed up, and it was just like no big deal, because next year it was worth more. And so it just covered the mistake. We bought a building that we got red tag shut down. We thought it was the sweetest deal ever. We underwrote $100,000 in reno, ended up being $300,000 in reno, right? And it's just like, holy shit. We just went through it. And it took a year to get done when it was supposed to take, 4 months to get done. And we had tenant problems and all these other things going on. And you know what? It's all good, because the market saved us in that deal. And so it doesn't matter. It still wasn't the best investment ever, but it's fine.
Yeah, it didn't hurt you that. Yeah.
Yeah. And we didn't lose the building. We didn't do, like, now, if you made that mistake right now, we're doing it for people right now. We're selling their properties for less than they have into it. And that's just a thing. The market correction is upon us. We just sold a property for someone that literally took $1 million L on it, right? Had 7.5 into it. We sold it for 6.2.
I think I know which one you're referring to.
Yeah. $1 million, right? So it's like, what? what this is happening left and right. But in 2010, you could do no wrong, right? You could buy anything. You throw a rock, you could buy the stupidest thing and it'd still be okay, probably. And now we're not in that environment anymore. You have to make really good decisions, right? So on that note,
I was going to say, let's make good decisions. Thank you to everyone who tuned in this evening. On behalf of Larry Mastropieri, I'm John Laws. We'll see you guys on the next one.
See you guys.